o'clock. So good afternoon. On behalf of the Siebert Lutheran Foundation, I want to welcome you to this impromptu session on the CARES Act. My name is Danny, and I am the Communication and Event Coordinator for Siebert Lutheran Foundation, and it's a pleasure to be here with you today. This act was just passed last week, but we wanted to find a way to share information about it quickly to our partners. So thank you so much for joining us to learn more about this resource. The session will be recorded and available on our website afterward, but feel free to share this with your colleagues. So with that, let's open in prayer. Dear God, thank you for allowing us this space to gather together today. We are so grateful for Chad's willingness to share his experience and knowledge with us. Open our minds and hearts to listen for you and find you in today's discussion. Our trust is in you in these uncertain times. We pray this all in Jesus' name. Amen. So with that, I would like to welcome our speaker, Chad Bruce. He is a CPA and manager in the nonprofit group at Clifton Larson Allen. Chad brings 10 years of experience in providing accounting, auditing, and consulting services to nonprofit organizations.
Thank you very much, Danny. And thank you for the invite to present to everybody. As Danny said, this is very new. This is very fresh in everybody's mind, and it's a great opportunity for many of you to cover some of your payroll and other costs. So today's session will be going through both the EIDL and the Paycheck Protection Program, otherwise known as PPP. We will be taking the deeper dive into the Paycheck Protection Program. So advanced slide. Danny, have you been able to share your screen?
I haven't yet. Before we get started, I just wanted to let everyone know that you're all currently muted, and that's just for the sake of so that we can hear Chad the best. The microphones are really sensitive, so like even sniffling, ruffling of papers will be picked up, and we don't want to interrupt our listening experience to Chad. So if I see that you're unmuted, because I'm the host of this meeting, I'll just go ahead and mute you. We will have a question and answer session at the end. So if you'd like, you can feel free to hold your questions till then, or there is a chat feature in Zoom. You can feel free to chat me directly, and I will gather questions and read those aloud for us at the end if you would prefer that method. So with that, I'll share my screen.
Thank you.
Yep.
All right, excellent. All right, go ahead and advance the slide right away here. So we do have to start out with a disclaimer. Information that we're sharing here, everything is still in progress as we go. Nothing should be construed as legal, accounting, or tax advice or an opinion provided by CLA. Please continue to work with your banks, with your accountants, with your attorneys, as this is a very fluid process. The other disclaimer, we're all working from home. I have my dog, so if you do pick up background noise or you hear my kids running around, I do apologize for that. I have taken as many measures as I can to limit our disruptions here. Next slide. As Danny mentioned, there will be a question and answer session to follow. We're going to try and hold 30 minutes of the dive into this program. I do have my colleague on the phone with us as well, Steve Johnson, who will be monitoring the chat function so that when we do get into answering questions, we're set up and ready to go with that. And also Steve will be providing some responses through the chat so that if you do have follow-up questions to our responses, we can address those at the end as well. Next slide. So the CARES Act was signed into law on March 27th. It's a $2.2 trillion federal stimulus. Two of the programs included in there are the Emergency Injury Disaster Loan, otherwise known as EIDL, and then also the Paycheck Protection Program, also known as PPP. today we'll be diving into the loan forgiveness provisions and eligibility provisions of those. The loan forgiveness is still kind of in the preliminary stages, still a lot of information coming out on that. Eligibility through the FAQs provided by the SBA and also Treasury, a lot of those provisions have been hammered out at this point. Another provision of the CARES Act was a $300 above the line deduction. That means if you have donors who take a standard deduction, they can still get a $300 additional deduction for contributions to public charities. Next slide. So this is an overview of both the EIDL and the PPP and how they compare to each other. So I'll run through the EIDL on here, and then we're going to take a deeper dive into PPP going forward. So the EIDL is the Emergency Injury Disaster Loan Program, and it is funded directly by the SBA. The maximum loan amount is $2 million, and it has a 2.75% interest rate for nonprofits. The term of it is up to 30 years and has a 12-month deferral. During that deferral period, interest does accrue. So the eligibility of this one is for private nonprofit organizations with fewer than 500 employees. So if you are considered a public charity, you will not qualify for this program. So that's why we're really giving the brief overview of the EIDL. It's my understanding that this audience, most of you are going to fall under that 501c3 designation, and your eligibility is really for that PPP program. If you are eligible or have other organizations that are eligible for the EIDL, the uses of that are for fixed debts, payroll and related benefits, AP, and then various other expenses as described in the legislation. Collateral is required on loans for greater than $25,000, and by applying for this program, you are immediately eligible for an emergency grant up to $10,000. Next slide. All right, so what is the Paycheck Protection Program? So these are loans offered under 7A of the SBA program. It allows for up to $10 million of a maximum loan amount with an interest rate of 1% over 2 years. There is a 6-month deferral period. Interest is accruing during that deferral period. It is guaranteed by the SBA, so there are no personal guarantees or any collateral requirements along with these loans. So we'll get into the calculation of the available loan amount and the calculation of loan forgiveness. So the amount forgiven is not taxable for federal purposes. Next slide. So the eligibility provisions are 501c3 organizations, also 501c9 or C19 organizations. Those are veteran organizations with 500 or fewer employees. So 500 or fewer employees is calculated as the average monthly headcount, not FTEs. So SBA has many affiliation rules, and these affiliation rules would imply that if you are controlled, say by a synod, you would have to look at your average monthly headcount at that level. The SBA and the Treasury both issued a religious exemption indicating that relationship of faith-based organization is not considered an affiliation. So this is really good news for all of our churches. Next slide. So the calculation of the PPP loan amount ends up being fairly straightforward, but there were a lot of questions when it initially came out. What is defined as payroll costs? So payroll cost, you're looking at either calendar year 2019, or you can look at the previous 12 months. So the recommendation there is wherever you can get the larger loan amount, take a look at both of them and make your determination based on that. So the previous 12 months is being defined as April 1st of 2019 through March 31st of 2020. So you take that average monthly payroll cost and multiply it by 2.5. That is your maximum loan amount. So the payroll cost is defined as wages, salaries, commissions, and other similar compensation. It also includes paid leave, which is vacation, parental, family, medical, and sick leave, severance payments, health insurance premiums, retirement benefits, and state or local employment taxes. Most of the time when we're seeing these state or local employment taxes, we're talking about the unemployment piece of your taxes. Specific exclusions from the payroll costs include individuals making more than $100,000. So it does cap it at $100,000 per employee. Now, there was a lot of questions, a lot of debate as to, was that an all-in cost, so including your insurance premiums and also your retirement benefits, or is it really just the wages, salaries, commissions, and similar compensation? The clarity that's been received from SBA and from the Treasury is that it is just your wages, salaries, commissions, and similar compensation. Also excluded is any compensation to employees whose principal residence is outside of the United States, as this legislation is really focused on the individuals in the United States. Qualified sick and family leave, for which the credit is allowed under sections 7001 and 7003 of the Family First Coronavirus Act, is also excluded. Next slide. So the big question that we've been getting this week is on housing allowances for our called workers, specifically the ministers. Currently, there is no official stance taken by the SBA or the Treasury. Our understanding, our belief is that this is going to qualify as payroll costs under the similar compensation piece of wages, salaries, commissions, and similar compensation. So therefore, when you're evaluating people making up over $100,000, you would reduce it to at $100,000. This is being interpreted differently by different banks. So it is very important that you talk to your bank. I understand that many of you, your payroll cost is very much weighted towards the housing allowances. The church that I am active in on the finance committee of, we do use the housing allowance for a lot of our called workers. So if you are talking to your bank and your bank is indicating that you should exclude those, you have to weigh the cost of going to another bank and potentially hurting your relationship with your current bank, or getting that maximum loan amount. Next slide. The PPP application, it's a fairly straightforward application once you hammer down that payroll cost. So a list of local lenders is available on the SBA website. Our general guidance is to start with a bank that you have a relationship with. So each bank may have their own PPP application. The link that I've provided is the Treasury provided application. And you can take a look through that. It is a very straightforward application. And really it comes down to you certifying a lot of information. The bank is not required to investigate those certifications. So it's really on your word, and the ramifications of a false certification would be handled through that forgiveness process, where your loan potentially would not be forgiven. One other item I wanted to mention about the PPP application, it is a good idea to get a second set of eyes on that. So the AICPA has indicated, right, the AICPA is the American Institute of Certified Professional Accountants. They have indicated that accountants are able to review those applications, but in order to get paid for that, it would need to be under an agent relationship. And what that means is that you would get, the accountants would get paid through the SBA, through that lending process. So the spirit of the PPP legislation is that an applicant for a loan is not harmed by the fees, so all fees are paid by the SBA. I do encourage you to talk to your accountant, but you should not be billed directly for any PPP related applications by your accountant. Next slide. All right, so this gets into the calculation of the loan forgiveness. A lot of this is still in flux. The information that we have put out here are items that have been directly addressed by the SBA and by Treasury at this point. So it's calculated based on the 8-week period following your loan origination date. So when you receive the funding, your covered period starts. The eligible costs include payroll costs, your interest on mortgages, interest on other debt obligations, rent payments, and utilities. Now the payroll costs, 75% of your loan, at least 75% of your loan needs to be used for payroll costs in calculating forgiveness. For the remainder, there are agreements that would have had to be entered into prior to February 15th of 2020. There is a second piece of the forgiveness calculation, and that's if you reduce your FTE during the covered period, there's a potential that your loan forgiveness will reduce. Next slide, please. So many of the churches that I work with also have a school, so I felt like it would be appropriate to talk about if you are involved in the private school choice program, how will that forgiveness of the PPP loan affect the reserve schedule? So currently there's no formal guidance provided by the DPI. And bear with me for a moment because we got an email right before this session that was discussing the DPI's response to the PPP loan and their work with the School Choice Wisconsin. I'm struggling a little bit here there we go. All right, so the information that we were provided this morning was that there was a note of caution provided by the DPI. So this is a quote: "Many schools are interested in utilizing the new federal Paycheck Protection Program. Federal funds forgivable loans are typically treated as a government grant or offsetting revenue that would lower your eligible expenses for the choice audit. School Choice Wisconsin raised this concern with DPI today, and they are considering if there are any solutions. We will keep you posted." End quote. So the expectation, my expectation in working with DPI for the last 10 years is that it will end up being offsetting revenue as a governmental grant. The result of this would be a decrease in the net eligible expenses for all pupils, which would therefore increase your private school choice program reserve balance. Next slide, please. All right, so here are some of the action items that we're asking you to do. So these loans are funded through your banks certified with the SBA. Now that has been amended to any FDIC insured lender and also the credit union NCUA. Connect with your banker, get their understanding of this program. There's been a lot of information released this week by the Treasury answering a lot of the common questions. Make sure that you're reading through that document. It's only, I believe, about 10 pages long, provides a lot of clarity. Get prepared, prepare your required historical financial data. This information is mostly payroll related. If you do want to get an understanding of your loan forgiveness, pull together your historical utilities, figure out what your interest on your debt will be over an 8-week period, and get all of that information ready to go. So these funds are limited. It's $349 billion that's expected to go fairly quickly. So time is of the essence here. Various larger institutions have already closed the window here. The good news is yesterday, I believe it was, the Secretary of the Treasury, Mnuchin, came out and said the expectation is that there's going to be at least another $200 billion released. But until they do that, we don't know. So the time is of the essence here. All right, next slide. Next slide. So a couple of the things that CLA can do, we do have a tool called CLE Intuition. So this is a financial modeling program. Really, it's related to the PPP because we can help you determine, do you need the cash flow? And it provides multiple scenarios where you can make decisions based on data. Next slide. So we've been working very hard to keep our website up to date. So I included a link to our website. We've been keeping this up to date every single day, multiple times a day. The thing that I want to encourage everybody to look into are these live streams. So we have live streams every Tuesday and Thursday that provide updates on the latest developments. I sat in on our live stream yesterday, which was very applicable as the Treasury had released their FAQs at the end of the day on the 6th. So we were able to work that into our live stream. We get a lot of questions answered during that live stream as well. Next slide. So this is where we're going to open it up for questions. I don't know how many have come in at this point.
Steve was answering a couple of them in the chat. People had asked the question if these slides are going to be shared. Some people had come in late. I'll just reiterate that we are going to share this stream. This is a live recording, so we'll share this to our website later on, so you can go back and watch it and see the slides from the beginning. Jan asks, is the payroll amount of the loan based only on full-time employment? Our director and other employees are only part-time employees.
No, those payroll costs include all employees. See, Michael just asked what happens if you just started doing payroll. Michael, could you explain a little bit more? Like, did you just start doing it in the last month? Yes. Okay. You're not going to have a base then for a monthly average payroll calc. So one of the requirements is that you were in business as of February 15th, 2020. Okay, Michael, thank you for the follow-up there. He said we had a part-time person all last year. I assumed her role per payroll costs would be includable, and that's what your loan amount would be based off of. Randy, I think, Steve, do you have a good response for Randy's question? I think that's a fairly unique one where we have to talk about some affiliation rules and things like that. Danielle, is there a way to, can we unmute?
You want me to unmute?
Are you able to just do Steve?
Yeah. Okay.
Okay. So the question is, there's a parish. So the question is the question for Randy is that the churches each file and then the parish would also file? Is that the main question?
There you go. Can I combine the individual churches to the parish's application? The other expenses such as lay pastors, secretarials at secretarial compensation of the 3 individual churches.
I guess I'm wondering if everyone should file separately. I think that the guidance we've gotten is that each entity that's eligible should file.
Okay, it would be almost to me like an LLC or a cooperation with individual locations, but we may just do it for the bulk of the expense, and that's the pastor's salaries, and then we'll deal with our own individual expenses by itself, because there isn't a lot of expense in those other 3 categories.
Yeah, and what I will say in addition to Steve's comment is certain banks are asking you to apply at the affiliate level. The guidance that we received from SBA and from Treasury is that each individual entity should have their own application.
Okay, all right. Thank you.
So Martin asked, did you say payroll costs are based upon 2019 or another 12-month period? There are 2 allowable periods. One is the 2019 calendar year. The other would be the last 12 months, so 4/1 of 19 through 3/31 of 2020.
Yeah, it's kind of whatever is the larger of the 2 numbers that would enable you to get a larger loan is why there's the 2 options.
Yep. Nathan, very good question. So initially the answer to that would have been, no, you have to use what is on your 941. There has been clarity provided on that. Our interpretation now is that you would be able to use other supporting documentation, such as your QuickBooks payroll reports and your bank activity, to show that those funds are leaving to support your payroll costs.
Yeah, the main thing is you want to show the cash being paid, so not accrued or not recorded as a payable, but actually the cash going out. And yes, this can be used for a LLC. To answer Michael's question. That's right. I grab one for you.
That's good.
And I guess for the LLC small business, just pointing out that if you're an independent contractor or self-employed, that loan application is live for you on April 10th. So April 3rd was the first wave. But then the next category, self-employed independent contractors, sole proprietors, that is all this coming Friday. You're welcome.
All right, I'm not seeing any more questions coming currently. I do want to encourage you to reach out if you do have any questions. If you are able to share your slide deck or your screen once again, Danny, the next slide has my contact information on it. Feel free to reach out with any questions. Danny, will you be reaching out when this recording goes live on your website?
Would be able to answer that question better because she's doing the communicating, but we can be sure to at least send an email to everyone who participated. Let me see if she's saying anything.
So 2 questions did come in since we started to wrap it up. One was on typical pitfalls or item and miss or lack of documentation. I guess the one question we've gotten a lot is more on, gross versus net payroll. So the issue was that banks would be saying you had to do net payroll, which means you could not include any amounts paid for federal income tax withheld or employee share of FICA. And we've been insisting that the amount that you can work into your loan size is the gross payroll. So I think that is the area where we've seen the most pushback. So not so much lack of documentation, but lack of, and this is not really to blame the banks, because this guidance has been evolving from Treasury all along. So some of the banks are being able to keep more current than others. But I guess that's the one biggest question we see a lot, is the gross versus net payroll.
All right.
And then
I was reading through it as you were responding, Steve. So
okay.
for Martin's question, is this then a cash flow basis only test, or the period involved? So it is a cash flow basis test for that covered period, the 8 weeks after you receive the loan. Is that answering the question? No. You're asking about the first covered period for building up a payroll cost? Yeah, so yes, it is based on cash flow for that period. So for the 2019 calendar year, or from that period 4/1 to 3/31, it is based on cash paid for the payroll costs.
Then David had a question about legal and ethical considerations. I guess you are, as you apply for it, you are asked to make a good faith statement that you've been harmed. So I guess, but then the point of this is to make sure you keep employing people. So I don't know, if we've seen people apply for less than the maximum they're allowed to, like if they're just looking at getting a loan to cover maybe 1 or 2 employees that they'd otherwise lose. So I think maybe some ethical considerations into the size of the loan you're getting.
Yeah, and I'll chime in on this as well. I've had a couple of conversations both with my church, who's kind of had the same situation where we haven't lost any staff, and our giving has been consistent. The determination made by our board was we weren't going to apply for it. I've had discussions with clients who feel like they have been impacted and they will be impacted going forward. Therefore, they are applying for the loans, even though the impact now is fairly minimal. So I don't think there are any, and this is just my personal opinion, I don't think there are many legal considerations. I think there are probably some ethical considerations that you would have to apply. Martin, thank you for the follow-up. So my understanding is that it is like what we have been using to build up the average monthly payroll cost is the monthly payroll reports. And you would use the gross salaries and wages off of that report. And I believe the 941s come into play if the bank is requesting that information, and it doesn't need to exactly reconcile, as long as you're able to show that through your payroll reports that is cash that is being paid to employees.
So is the question maybe a pay period question, like, your payroll for the quarter ended March 31st, some of it might be paid in April? Martin, is that maybe what you're getting at?
Okay, I think this is actually a very, very good clarifying question. So the Martin's response is, if I use 2019 as the period the employer Social Security and Medicare payments are made, if I use 2019 as the period the employer Social Security and Medicare payments are made in 2020 for the last quarter, would that payment be considered as 2019? So this is a very important distinction, that the employer side of these costs are excluded. It is the employee payments made, and that's why you're using that gross payroll amount. All right, so with that, I think we can hold it open here for a couple, if any straggler questions come in. I'll stay on until everybody is off of the meeting. Otherwise, thank you very much for joining. Feel free to reach out either to Charlotte or Danny or myself. I believe you should have all of our contact information at this point.
Yeah, thank you so much, Chad, for sharing your experience. And thank you again for joining us today, for you and Steve. And for everyone, we pray that God continues to guide and protect us during this time. And just that everyone have a great day and be safe.
Thank you, everybody.
I'm just going to jump in here real quick. I was the one that asked the question about the slides. Is it possible to get a paper copy sent by email?
Yes, we can do that. Danny, do you want to coordinate getting that over to her? Danny,
I can I can do that. If you want to send me a message with your email address, I'll send it to you. you want to stay on a little longer, Chad, or end the meeting?
I think we can call it.
Okay. All right. Thanks so much.
Yeah, thank you.
Mhm.